Hi, I'm Jimmy. In this video, we're going to walk through my analysis of advanced micro devices, ticker symbol AMD. Now, this video is going to be a little bit different from my regular company analysis videos, since this video is actually part of a school assignment that I had to do. So some of you may know that I'm currently working on my doctorate degree. It's actually a DBA, which is short for Doctorate of Business Administration. It's a lot like an MBA, but for a doctorate, I guess. My specialization is financial management. So in my current class, our professor asked us to create a video on, it was a follow-up video on a paper that we had recently written. Now, I had written my paper on Intel since I had already reviewed the company and I knew a lot about it. So they asked us to review a competitor. AMD is a logical choice. So that's what this video is. Okay, now let's jump into the actual video that I submitted to school, and then I'm going to come back at the end of that with some follow-up thoughts that they didn't ask about, but I think is very important for anybody who's considering investing in a company like AMD. Advanced Micro Devices is a semiconductor company that offers products like microprocessors, chipsets, graphics, video, and multimedia products. The revenue in 2019 was dominated by their computing and graphics products. It's also important for us to consider some competitors in the semiconductor space. This includes companies like Intel, Nvidia, and Broadcom. The semiconductor industry is a highly competitive industry, and in recent years, the industry has seen a lot of consolidation. Intel is the largest and most established player in the industry. Although in recent years, Intel has run into some innovation issues as both AMD and even Nvidia in their own right have clawed away some of the business that was once most certainly going to go to Intel. AMD has become one of the most disruptive players within the industry. And AMD chips have surpassed Intel in many respects from both a quality perspective and from a price to the consumer perspective. This gives AMD a real advantage and likely a stronger track to growth over the coming years. To illustrate AMD's position within the industry, we've utilized some key financial ratios, but we're reviewing these numbers using a common size analysis. Basically, this allows us to analyze the company's financial statements and eliminate the impact of the size of the individual companies. For income statement items like these, well, we're comparing the number, each individual line item, to revenue. That is why revenue represents 100%. It is 100% of itself. But when we shift down to gross profit, well, AMD falls on the lower end of their competitors from a gross profit perspective. Now, this is going to be very important going forward. I'll bring it out as we approach different numbers that this affects. But basically, this number is low because it's costing AMD more to generate basically their cost of goods. So it costs them more to make their products, they sell them for less, so you end up with lower gross profit margins compared to a company like Intel. Intel does most of their own manufacturing themselves, while AMD outsources much of their manufacturing, which really introduces another added cost. So the disadvantage of their relationship with a company called TSMC, who is the company that does a lot of their manufacturing, well, again, it adds a cost. The advantage to them doing that is they're able to leverage TSMC's experience within the industry to help them stay on the cutting edge of innovation, which is exactly what AMD has done. So perhaps them having lower gross profit margins perhaps is a method to the madness in the sense that they could gain more market share compared to their competitors as long as they can keep their prices reasonable. Moving right along, we can see that AMD is right in the middle of the pack when it comes to how much they spend on research and development relative to overall revenue. Now, again, Intel is the largest company here, so it's important that we recognize that these are relative numbers. Intel spends almost $10 billion on a real number perspective, more than Nvidia does. I'm using Nvidia because they're the largest number here. Well, Intel still spends $10 billion more than them. Clearly, they're not spending enough if AMD and Nvidia are both catching up to them from a product development standpoint, even surpassing them. When we look at their interest expense relative to revenue, well, we can see that AMD, Intel, and Nvidia have nearly no interest expense overall relative to revenue. Broadcom is the highest at just 7%, which is a perfectly reasonable level compared to many companies within the S&P 500. In fact, it's very likely that a company like AMD could afford to put on additional leverage. empirical evidence has shown that companies that add a reasonable amount of leverage have the potential to grow at a faster rate as long as that company is paying an interest rate that is lower than the required rate of return. Now, it's possible, since AMD is a younger company and they don't have the established credit of an Intel, it is possible that they haven't been able to achieve the interest rates that they want for them to increase the amount of leverage that they have. Although it appears that that could be changing very soon. They could be obtaining very good rates in the near future. When we look at Standard & Poor's credit rating, well, right now AMD is falling right below the investment grade level at BB+. According to AMD's press releases and press releases released by Standard & Poor's, AMD has increased their credit rating, the Standard & Poor's credit rating, every year for the past 3 years. So it's very likely that this will continue to increase and AMD is going to fall into investment grade territory, which is likely to improve their available interest rates to them, which would make them leveraging up more logical. Okay, simple enough. Now, when we go back to their net profit margins, well, AMD is once again on the lower end of their competitors. Now, this is not too surprising considering that their gross profit margins were as low as they were relative to their competitors. So it makes sense for that to fall all the way through the income statement to the net profit margins. Okay, so that gave us a quick look at the income statement. Now let's quickly run through a decomposition of AMD's return on equity using a DuPont analysis. And as we can see from our DuPont analysis of AMD and their 4 competitors, well, AMD has the second lowest return on equity above only Broadcom. But let's see why. And this is the advantage of using the DuPont method. The DuPont method allows us to break down the individual components behind return on equity to see what could be driving it and to see how a company could go about improving return on equity. Now, I should also bring out that these top 3 numbers are actually in percentages. So AMD's 92 right here, well, that's actually 92%. Now, the closer these top 3 numbers are to 100, well, the less of an impact that will have on return on equity. Knowing that, well, we can safely assume that operating margins played a large impact. They played a large role in terms of lowering AMD's overall return on equity. Operating margins are impacted by the lower gross profit numbers that we saw a minute ago. Like I said, this is where that comes back to haunt them. But we know that's happening because they're charging lower prices for their products and they have a third party in there helping them manufacture. So perhaps, again, that's acceptable. Now, one bright note for AMD, one point where they separate themselves, is their asset turnover. Now, asset turnover it measures how much revenue the company generates for every dollar of assets that they have. So with AMD, well, we can see that they generated $1.30 for every dollar in assets. For every dollar asset that they have, they generated $1.30 in revenue. So that's clearly better than the rest of the companies. But this is likely tied back to their outsourcing a large portion of their manufacturing to TSMC that we mentioned before. Since AMD doesn't have to pay for the facilities needed to manufacture those products, well, they're going to have less assets, hence a higher ratio. Another advantage that AMD has is the higher leverage ratio. By the way, these numbers at the bottom here, you want these numbers to be as high as possible. The higher return on equity we end up. Well, the higher leverage ratio implies that AMD is able to handle more debt than its competitors. We also know that to be true because AMD's debt was very low. Okay, so that's most of what I submitted over for the school assignment. There was a conclusion that I cut off from here, but it was really just repeated everything I just said anyways. Now, the one thing that I believe that was left out of that assignment that I think is somewhat necessary to make an analysis a good analysis, and that is a valuation. What do we believe AMD stock is worth today? So this is a discounted free cash flow calculation that I did using analyst estimates. I based that on a required rate of return of 7.5%. That's what I've been using recently for all my companies. I've been using a perpetual growth rate of 2.5%. And according to that, well, AMD stock is worth about $72 per share. Now, if you're not sure how to do this calculation, I've actually done a video on this in the past. I'll leave a link in the description below to that video if you're curious. But before we just take that number at face value, I actually realized that I think there's a mistake with that. And that is that what this calculation assumes with a 2.5% perpetual growth rate is that after our analyst projections are up, well, growth will drop right down immediately to 2.5% and stay there indefinitely. I wasn't sure that was completely reasonable. So I went ahead, made an adjustment to it. I took what analysts had and then I continued from there. I grew it by 10% the next year, then 7.5%, then 5%, then 4%, then 3%, then 2.5%. So I did 10 years of total projections. With that new calculation, well, here is where we end up with our current fair value of AMD stock. And as we could see, well, this seems more reasonable. Some could even argue this is conservative. $83 compared to the current price. Here's what the current stock chart looks like. Well, the current price is about $87 per share. So 83 is not far off at all. In fact, I was surprised to see AMD stock so close to our calculation of fair value. Now, I would like to see this stock fall further before we jumped in and got involved with it. Now, I do personally own Intel, so if I was going to jump in and buy AMD as well, I'd have to find more companies to diversify in other places. But again, if this stock falls, I'm going to be adding this to my bucket list, because if this stock does see a pullback, well, I think that this could make for a very good tandem with Intel. Now, I recognize that this video was a bit different from a presentation standpoint compared to a lot of the company analysis videos that we've done. And I know that I sort of rushed through the DuPont method in the video before, in the video earlier, and one of the reasons for that was because in school I had to write a whole paper on it, so I was able to sort of rush through it in this video. Now, I do think that that is a fantastic method to analyze stocks. So if you're curious, I actually did a short animation video where I walk through what the DuPont method is, how it can be used, and how it's important. So if you're curious, perhaps that is a good next video for you to watch. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thanks, and I'll see you in the next video.